In this video, the 5 highest taxation countries in Latin America. Latin America is known as being a region with tons of low tax options, but these 5 countries are not them. These 5 countries have very high taxes, and if you are an international money-making person and you want to avoid high tax countries, these are the 5 high tax countries that you need to avoid. Now, I know many of you want to see the statistics. They want to compare income tax rates. Is it 41%, 43%, 36%? Well, in this video, we're going to be using one heuristic for how we are judging the 5 highest tax countries in Latin America, and that is pure vibes. Seriously, I want you to take a look at this map. This is a map of the territorial tax countries in Latin America and the world. What is a territorial tax country? We will go more detail into this in other videos, so just search our channel. We've probably done a video on this, but long story short, a territorial tax country only taxes you on the local sourced income, the income that you produce in that country. Whereas a residency taxation country will tax you on your worldwide income as long as you are a resident of that country, right? If you are from the UK, if you are a resident of the UK, you get taxed on your worldwide income. If you are a resident of Canada, you get taxed on your worldwide income. But if you are a resident of, say, Panama, you would only get taxed on your Panamanian source income, and Panama does not care about your foreign sourced income. So territorial versus residency taxation systems is a very important concept to understand for this video, because this list of 5 high tax countries in Latin America is really a list of 5 residency-based taxation countries in Latin America. That is the heuristic that we are using to judge this ranking of the 5 highest tax countries in Latin America. So without further ado, let's jump into it. We are going to be going down the list north to south. So our list of 5 high tax countries in Latin America, let's get right to it, is Mexico, Colombia, Brazil, Peru, and Argentina. Okay? Once again, Mexico, Colombia, Brazil, Peru, and Argentina. Those are your 5 high tax countries in Latin America. So let's start with Mexico. Mexico is undoubtedly a high tax country. It has quite a number of different incentives and programs for both companies and individual workers to lower their taxes based on different programs that they have. And we have lawyers, by the way, at My Latin Life that can help you figure out some of those special incentives programs. But by and large, for the average person, Mexico is just as high tax as, say, Canada. You're talking well into the 30-something% income tax, 40-something% income tax. It's by no means a low tax country. Now, in Mexico, we do need to make a bit of a distinction between citizens and non-citizens or expats. And the reason being is that if you are on a temporary resident visa or a permanent resident visa in Mexico, the way the Mexican tax system works is it's sort of based on a center of life test, an economic center of life test. So if you can prove that your economic center of life is somewhere else, is outside of Mexico, then you can sort of argue that you are not a tax resident of Mexico because you are a tax resident somewhere else. So that's really what a lot of expats in Mexico are doing. And so based on the information that we've gathered from our experts, you can even spend over 6 months per year, over 183 days per year in Mexico and still not pay tax, as long as you have a really rock solid economic center of life somewhere else. For Americans, that might be the United States, because, you know, you're taxed on your worldwide income in the US and you might get paid to US bank accounts and so forth. But whatever your setup is, make sure that you're building substantial ties outside of Mexico if you do kind of want to claim that, right? Another thing I will say for expats in Mexico is if you have residency in Mexico, and you are on a path to citizenship and you want to eventually get that Mexican passport, well, there are clauses in the Mexican Constitution and in the Mexican laws that any Mexican citizen is by default considered a tax resident unless proven otherwise. So you're kind of guilty until proven innocent when it comes to Mexico tax residency and Mexico taxation. And so once you become a Mexican citizen, after you naturalize, the onus will be on you to basically prove that your economic center of life is still somewhere else, and is somewhere outside of Mexico, and you'll have to prove that. So make sure that you're going to be in a position to be able to prove that, and you have a tax residency certificate from somewhere else and all that good stuff. But long story short, by and large, for Mexico, for Mexican citizens, for Mexican nationals, Mexico is not a low tax country, but of the 5 countries on our list, it's probably the most chill, or the country with, I guess, the most exceptions and incentives and programs and ways to lower your taxes. But the headline tax rate is by no means low, and you'll have to use special strategies in order to get that down. All right, next country on our list is Colombia. Colombia, again, is undoubtedly a high tax country. Another country that's well into the 30-40% income tax, all that horrifying stuff. And so for the expats listening to this, you probably know expats that live year-round in Colombia or spend a lot of time in Colombia, and it doesn't really maybe seem like they are paying taxes. Well, those people are not doing it right. Those people are probably not doing what they're supposed to be doing. And so it's a very delicate balance where Colombia has a very specific days test where if you spend more than 183 days per year in Colombia, you are considered a tax resident of Colombia, and you will therefore be paying tax on your worldwide income, right? So, recapping, we talked about Mexico and about how Mexico, it might be more of an economic center of life test, not really a days test. Well, in Colombia is very much a days test. So if you are physically present in Colombia for more than 183 days, you are going to be a tax resident of Colombia, and you will have to pay tax on your worldwide income. Make sense? Next country on our list is Brazil. Brazil is another very high tax country, and a country that, according to our sources, is becoming increasingly aggressive and assertive from a tax collection perspective, where their tax collection offices are being more and more assertive about collecting taxes from their local citizens, from Brazilian businesses, and yes, even from expats living in Brazil. As a permanent resident of Brazil, you are supposed to pay taxes on your worldwide income, regardless of the number of days that you spend in Brazil. So if you are a tax resident of Brazil, you will be paying tax on your worldwide income, and a Brazilian permanent resident is by definition a tax resident as well. So whereas when we talked about Colombia and about how Colombia had a very strict sort of 183 days rule that applies even to their residents, Brazil is a little bit different. And to the best of my understanding, for Brazil, if you are a Brazil permanent resident, even if you spend less than 183 days a year in Brazil, you are still considered a tax resident. You are still supposed to pay tax on your worldwide income. And so when you think about Brazil's fast track to Brazilian citizenship, where you can get Brazil citizenship with only 1 year of residency by having a kid or getting married in Brazil, just realize that you will be a tax resident for that year and probably really 2 years while you're on that track to getting Brazil citizenship. So when people think about birth tourism in Brazil and, let me have a baby and then I become a citizen in 1 year, just realize you'll probably be a tax resident of Brazil for 2 years during that process if you, as the parent, want to get Brazilian citizenship. So that's just a side note there. We had a Brazil roundtable episode where we talked about taxation in Brazil, among other topics. And we talked about how it's just incredibly confusing and complicated, the tax system in Brazil. Nobody really knows how much they're supposed to be paying, especially at a corporate level. Brazilian corporations, it's just almost impossible for them to really comply with all the laws and all the different taxes. And so if you looked at any Brazilian business, they might be in non-compliance or something, based on all the different laws. And it's not that they want to, it's just that it's so complicated that even Brazilian tax accountants and lawyers and tax professionals, they don't really know. I mean, it's just so complicated. And I think in the episode we even talked about how for Brazilian businesses, once they get to a certain size or stature, like maybe 100 plus employees or something, they just go to their local Brazil tax office and say, look, everything's so complicated. How about we just pay a flat tax, or we just pay XYZ rate? And then the tax collection office goes, yeah, all right, that's good enough. And so Brazilian corporations kind of cut their own special deals, because if not, it would just be too complicated and impossible to comply. So that's just a little anecdote to give you an idea of how the Brazilian tax system is very complicated. All right, next country on our list is Peru. Peru is another high tax country, and it's a pretty high population country as well. It's 30 million plus people. And one thing you might have noticed from our list of our 5 countries is it's all of basically the 5 most populous countries in Latin America. And so therefore Peru is on the list. Peru is not a tax haven or a low tax country by any means. It's pretty standard, 30-40% country, all that good stuff. And I think Peru employs more of a 183 days rule, where if you spend more than 183 days in Peru, then you become a tax resident of Peru, and therefore you will be taxed on your worldwide income. Because we have so many expats and digital nomads that listen to My Latin Life, you probably know that Peru is one of the fastest tracks to citizenship in Latin America. With only 2 years of residency, you can become a citizen of Peru and get a Peruvian passport. The thing is, for you to maintain residency, you're going to have to spend more than 6 months a year in Peru in order to be able to successfully renew your residency visa and to have a successful application when it comes time to apply for Peruvian citizenship, right? And so the thing about maintaining Peru residency and spending 6+ months is that'll basically, by definition, turn you into a Peruvian tax resident. And so while you're on your path to Peruvian citizenship, you're probably going to have to pay taxes on your worldwide income. I'm not going to comment on how good Peru's global tax collection enforcement system is, but yeah, no comment on that. Long story short, Peru, another high tax country and the 4th country on our list. So without further ado, here is number 5, the last country on our list. Remember, we're going north to south, so what country could it be? Is it Chile? Is it Uruguay? Is it Argentina? Is it Paraguay? As you probably guessed, it is Argentina. Argentina is a notoriously high-tax socialist country. Our boy Milei has been in office for a couple months now. He's taken the chainsaw to work, but it's still early and the taxes are still on the books. It's still a very high taxation country. Similar to Brazil that we talked about, Argentina is also just incredibly complicated in terms of all the different taxes and the rules, and it's very hard to be in compliance as an Argentine citizen or business. Argentina, as well as Brazil, actually both have very high tariffs. So any kind of car or iPhone or anything from outside Argentina is incredibly expensive due to import tariffs. Income tax is very high. Corporate tax is very high. Taxes are just very high in Argentina across the board. And it's also just incredibly complicated and convoluted as well. So it's kind of the worst combination of high tax and also high cost of compliance, and it's just so confusing that no one even knows what they actually owe. Another plug, we did a Argentina roundtable episode on the My Latin Life podcast, where among other things, we talked about taxes in Argentina, and there's a good lengthy discussion there, so I encourage you to go check that out. But long story short, nobody really knows what they're supposed to be paying. Everybody just pays a little bit, I guess. But tax evasion is basically a national sport in Argentina. We don't condone that, but just letting you know the lay of the land. Argentina's nuts from a tax perspective, but that's to be expected. All right, so those are the 5 high tax countries in Latin America. Again, going north to south, Mexico, Colombia, Brazil, Peru, and Argentina. It is probably no coincidence that these are the 5 highest population countries in Latin America, the most populous countries, and being the 5 most populous countries in Latin America, they have all instituted residency-based taxation systems. These are also some of the most popular countries in Latin America to visit as a tourist. Mexico, Colombia, etc. The most popular countries to visit by far, right? They're also large countries by territory, which is also probably not a coincidence. So how should you play this as an expat, as a digital nomad, as a retiree? Well, if you have low income like a retiree, then I would probably say just don't worry about it. Just go wherever, you'll be fine. It won't be a big deal. But for the digital nomad, for the expat, for the high net worth individual, these 5 countries are the 5 countries that you do want to avoid. I know a lot of people, a lot of digital nomads and stuff, what they'll do is they'll do a trifecta method, as Nomad Capitalist preaches, or they'll spend just less than 6 months per year per country. You know, these countries typically offer 180 days per year visa free, maybe 90 days at a time, maybe there's a renewal, whatever. And so what a lot of my buddies do is they'll do, say, 6 months in Colombia and 6 months in Brazil, and they'll just keep jumping back and forth. Or 6 months in Colombia, 6 months in Argentina. And by 6 months, definitely try to keep that to 179 days. Don't cross that 180 or 183 barrier. You do not want to break that and get yourself into tax resident territory. So that's kind of how a lot of people have historically played it, is they just kind of live on tourist visas. They don't want to become residents because they don't want to get a tax ID or get wrapped up in the tax system at all. And so they just kind of keep it on tourist visas, max 180 days a year, maybe pop around. And it's not a bad life, right? Maybe you do 4 months a year Argentina, 4 months Colombia, 4 months Brazil, and that could be a wild lifestyle. But yeah, of the 5 countries, Mexico is probably the one that's the most flexible, probably the one that's the most flexible for expats as well as local citizens. And then the other 4 are pretty much nightmares. But overall, those are the 5 high tax countries in Latin America. I hope you guys enjoyed this video. Please, if you enjoyed this video, like on YouTube, subscribe on YouTube. Feel free to hit us up on Twitter or anywhere else. Leave a comment, all that good stuff, and we are happy to help you obtain residence, help you plan your personal tax residency and tax holistic scenario. So please hit up My Latin Life. Thanks again for watching the video.